Welcome everyone to the next video in the cash flow positive video playlist. In this video, I'm going to take you through Property Analyzer, which allows you to really crunch the numbers on a potential investment property that you're looking at. Now, once you've found a property through Investor Search and you've done your analysis through my research, and you really want to work out, is the property in fact going to be cash flow positive? What is my gross yield? What is my potential net yield? You can utilize Property Analyzer. Now, there's two ways that you can run this report. If you have the address of a property, you can simply go to the home page and click on Property Analyzer and type in the property that you're interested in looking at. So again, you can copy and paste or simply type in the property, select it from the pick list, and then indicate the type of property it is. If you have the land size, you're welcome to fill that in, and then fill in the attributes of the property. Now, for those that perhaps have watched the first video in the playlist, I mentioned the default profile. So you would have filled in some financial data already. If you want to utilize that information, you can actually tick this box and it will pre-populate a lot of the fields that you're going to see in the next couple of minutes. So I'm going to tick it. I can then add the property. Now, if you've saved any previously, you can then just click on any properties that you've already analyzed down the bottom here, and perhaps even access any that you unsaved through the Unsaved tab. Otherwise, once you've filled in the address and the basic criteria for the property, you can hit Add Property. It then takes you through a 3-page wizard of essentially just confirming and filling in any missing fields. So what you can do here is indicate the purchase details. So what is the deposit as a percentage, or you can change it to a dollar value. What is the purchase amount of the property that you're looking at spending? What is the market value of the property? So from all the research that you've done, what do you think the property is actually worth? Then you've got other purchase expenses. So things like capital improvements at purchase. Are you going to be doing a bit of a cosmetic renovation or spending anything to improve the property? We have a stamp duty calculator. So you can allocate the relevant state that you're looking in, purchase price, property use, description, whether you're a first home buyer or not as well. Added to the analysis, solicitors costs, other costs as well, and then you can fill in the loan details as well. So if you've had a pre-approval from a lender, you can put in that information in here, indicate the interest rate, any other costs associated with that as well. Once you've done that, it will then calculate your total purchase cost. You can then click on rent and expenses and fill in what the weekly rent's potentially going to be. If it's a holiday rental, you can switch it across to holiday rental, and then we give you the ability to put in different rental amounts, occupancy rates, whether it's a peak, shoulder, or off-peak period. Otherwise, if it's just a standard residential long-term, you can change it back. Annual property expenses. So we've listed the most common property expenses that usually are incurred by an investor. We do have an other filter down here as well, so you can utilize that if none of these standard filters accommodate for what you're after. But fill that all in. That will then calculate your total annual property expenses, and then obviously at the top it calculates your total annual rent. I can then hit tax and market. Final step, assign an entity. So that's important because this will help with the forecasting of your potential tax refund. Obviously, buying an investment property under your own name has different tax implications compared to buying under a company or under a trust or under a self-managed super fund. Market factors. So you've got the ability to guesstimate the capital growth potential for the property in the area that you're looking at. We do give you historical stats here as well. So if you wanted to use the same figures, you can, or if you want to be a little bit more optimistic or conservative, you can change those figures. CPI is just inflation, so you can get that from the Australian Bureau of Statistics website. And again, that will be used to forecast what your expenses potentially could increase by each year. We have the provision for land tax as well, so if you need to pay land tax, you can accommodate for that in here as well. Finally, we have a depreciation estimation calculator that you can utilize. Just simply fill in a couple of fields that are set here, and then it will include a depreciation figure in the report. You can untick that box if you don't want that included. So once you've done that, you can then hit results, and it will generate a much more detailed report than the snapshot that's provided in Investor Search. It will now show me all the way up to year 10. I can click on show all years, 0 to 10, and then you can get a year-to-year breakdown to see what your property potentially will look like from a cash flow and market value point of view. So we have an overview. Again, you can change some of these stats. You can click on edit future years forecasts. Obviously, over a 10-year period, a lot can change economically, politically, so you can change these stats if you need to. Property value of the property, you can see that in 10 years time, based on the current capital growth rate average that you've entered, what your property potentially may be worth. You then look into statistics, have a look at what equity you're building into the property. We also calculate surplus equity that you can potentially tap into to reinvest, and what that looks like in terms of buying power or what you could potentially borrow. Now, more importantly, cash flow. Just because the advertisement from the agent says it's cash flow positive, this is where you can really work out how much is going to actually be in your pocket, or how much are you going to have to actually contribute to be able to cover the expenses and the loan repayments. So we calculate the gross yield, the net yield. You can see the annual rental income there, and then we got your cash deduction. So we calculate your total property expenses, your total interest repayments, and then you can really see what your pre-tax cash flow per year is, and we also then break it down per week. So you can see that over a 10-year period. We then finish the report with your depreciation, what your deductions are, is it a net profit or loss, and you can see then potentially what your tax refund is, and then ultimately your after-tax cash flow per year and per week. And this will then really allow you to work out whether this property is going to be cash flow positive or not. Now at this point you can add to save, so you can save this and come back to it later and adjust any figures. If you're perhaps waiting on some expense figures from the real estate agent, you can come back to that later and edit it. Otherwise you can click through the graphs. Just gives you a quick snapshot of who pays for the property. Ideally, you don't want to see any red if you're looking for cash flow positive property. The tenant's rent should be able to cover all the expenses. You then got your market value versus loan, and then cash flow pre-tax and after-tax lines there as well. Finally, you click on summary. We just combine that snapshot with the property statistics, the advertisement as well, through this final summary report, which you can then print off. There's a print view button there as well. Now, if you found this property through Investor Search, there is an automated way that you can do your analysis. So instead of going to your homepage and going through the process that I went through, so on the ad itself in Investor Search, you can click on Analyze in Full, and this will pre-populate most of the data for you. So you click on that. If there's an advertised rent, if there's an advertised purchase price, that will pre-populate. You can obviously adjust any of those figures if you need to. You may not want to pay the full price because based on your research, you know it's worth less than the asking price, so you can change all those figures. And then again, the opportunity to update the entity, and then when you hit next, it will automatically generate that report for you. And again, it pulls through all that data from your default profile, so it's a lot more automated. But again, you have the opportunity, if you need to change anything, you can click on edit and repeat that process. So that's Property Analyzer. This really focuses on the numbers, making sure that you know what you're getting yourself into, what does the rental actually look like, what does the cash flow equity actually work out to be over the next 10 years. So that brings us to the end of the Property Analyzer training video for the Positive Cash Flow Strategy playlist. If you'd like any further training or assistance, please don't hesitate to contact your portfolio manager, and we'll be more than happy to help.